Hello, and welcome to another episode of Connecting Climate Capital. We're very privileged today to welcome two very esteemed guests from Save the Children Global Ventures and Natural Carbon. We'll do their introduction shortly. My name is Alex Cruzel, CEO and founder of Telesto Strategy, and I'd like to briefly tee up our conversation for today. So why climate capital? What's our burning platform? And why do we convene global leaders on these topics? First and foremost, there's a big gap. There's quite explicit need, especially in vulnerable communities globally and in the global south. And we also know there's a new surge of climate financing available. But given the tremendous need, and even still with the growth, there's a tremendous gap that's in the trillions, and we have a lot of work to do globally to maintain our progress towards a 1.5 degree pathway. The big question that we ask many of our experts globally is this one, and it will have a different form given our esteemed guests, but what we're trying to get at and advance solutions on is what preventing the investees from attracting a greater share of climate capital. What are some of the new solutions, new approaches, new partnership models that can be deployed to advance this conversation in a material way? We know on one hand, there's obstacles for investors. We know there's obstacles for recipients. When you talk to investors, they say, hey, there's no pipeline. When you talk to recipients, they say, hey, there's no money. So we're trying to work collectively along this continuum to think through these specifics, bring experts here who can help us understand, especially risk mitigation is a large one, new pipelines of investable and at-scale opportunities. How do we develop those? And again, build knowledge, build capability across this continuum. Just for reference, and those who are newer to this field, you might see some of these terms being used. And just to quickly provide some structure to the conversation, we have public financing actors, we have private financing actors, and a range of instruments that are leveraged to deploy new funding opportunities around climate capital. Some of these might come up. I encourage you all to look more into these. And again, our experts on the call today might reference a number of them. Finally, just briefly about what we're doing here and this momentum that we're carrying forward. We were called upon to support Department of State's Coalition for Climate Entrepreneurship Initiative, which really coalesced last year with a tech convening in San Francisco. Telesto was also invited to host an official side event at the White House Africa Leaders Summit in DC to really go in deep around climate finance. We built on that momentum with a formal delegation that went to Accra and think about a localized context of the climate capital ecosystem. And we've continued those momentums, as I was saying, with different esteemed guests and experts globally. And we have two on today's call who can help us tee up future conversations and future actual workshops, again, where we can hopefully move the needle on finding new solutions. I won't go into too much detail here, but Telesto, for those of you who are new, we offer a range of services to our corporate, private sector, public sector partners, whether it's getting started on the journey of ESG and sustainability, supporting leadership, like I mentioned, thinking about new structuring for green finance vehicles. The roadmap to net zero is a global imperative, and we help a number of organizations do that. We also understand for this to be successful globally, we need to integrate ESG and sustainability into strategy and a strategy for business. And then without quantifiable results and accountability and transparency, we can't make progress. And so that requires data. And so we also support our partners with a degree of ESG data management. So with that, I'd love to hand it over to my colleague, Andrew Ellisberry, a managing director at Telesto, and he'll take over and introduce our esteemed guest. To you, Andrew.
Thanks very much, Alex. Appreciate it. Today, we're very privileged to be joined by Paul Ronalds, who is CEO of Save the Children Global Ventures, and Marnie Lassen, who is the CEO of Natural Carbon. Both are very active in the climate capital space, and we're very much looking forward to speaking with them to get to know a lot more about what their organizations do and what they're doing to contribute to the various different efforts that are being undertaken to combat climate change. So welcome, Paul, and welcome, Marnie. I'd like to kick it off, Paul, by first addressing a question to you, which is asking you to tell us a little bit about the origin story of of Save the Children Global Ventures, and how exactly does it complement the work that Save the Children, obviously a very well-known organization, does more broadly?
Yeah, thanks, Andrew, and great to be on the show. Like many good ideas, Save the Children Global Ventures was born out of a sense of frustration, Andrew. For the first time in decades, we are seeing key child wellbeing indicators going backwards. I think we all know COVID, conflict and climate change are having a really significant impact on many child wellbeing indicators around the world. And it was really clear to us at Save the Children that we couldn't go on doing the things that we'd done for many years before and expect a different outcome. We had to find significant new sources of funding that would help us address these key child wellbeing issues. And secondly, identify great new innovations, if you like, that could have impact for children that were not just 10 or 20% more effective per dollar spent, but were 3 times, 5 times, or even 10 times more effective. So that's really the mission of Save the Children Global Ventures, to unlock really significant new pools of capital that Save the Children hasn't traditionally gone after, but that complement certainly our existing grants and our philanthropy. I mean, we're not for a moment saying that we don't also need more grant and philanthropy. There's lots of problems that the sorts of products that we'll be talking about today don't solve, but we need to unlock these new capital pools, and we need to find these great new interventions. I mean, one of the really exciting thing about the age that we're living in is the promise of new technologies. Every day we're seeing breakthroughs in health and education, in agricultural technologies, and of course climate technologies. And if we can bring those to bear on the communities that Save the Children cares most about, then we think we can really start to address that widening gap and in fact reverse it.
So I take it then a big part of what you all do at the Global Ventures portion is to catalyze private funding, and that's sort of what is different than perhaps and complements the approach that Save the Children as the broader organization takes. Can we get a little bit more specific about how, in particular, Save the Children Global Ventures is out there working to catalyze private capital, and what is sort of your investment approach writ large?
Yeah, so we've got 3 main, if you like, Andrew, product areas that Save the Children Global Ventures is focused on. The first is blended finance transactions, and perhaps for those listeners that are relatively new to the innovative finance space, this is really where we bring together philanthropy or grants, such as from USAID, and we combine that with private sector investment. And we're currently doing a range of those sorts of transactions in the early childhood development space, in the health space, and in other places. And they do really provide the promise of making, if you like, the philanthropic or grant dollar go further. So that's our first very significant large category of products. The second is impact investing. Impact investing used to be a sort of niche or a novel idea. It's now becoming quite a mainstream financial concept. So the Global Impact Investing Network estimates that there's now over $1 trillion of impact investments globally. That $1 trillion has generally been ignored by the development sector, organisations like Save the Children. And really what we're trying to do is unlock some of that. So we launched our first commercial impact investment fund now over 3 years ago in Australia. We've just launched a second fund, and we've got plans for a third fund early next year. And all of these are targeting this new funding pool, impact investors, and looking to apply that to the best new health, education, climate change interventions right around the world. So that's the second category. The third category is our climate finance work, and this is where we're particularly collaborating with Natural Carbon and with other organisations to provide a sustainable source of funding for both environmental improvement as well as broader community wellbeing. So we're really looking for environmental plus co-benefit outcomes from the sorts of climate change projects that we're involved in.
That's great. Thanks for the very clear articulation of that. I'm sure we'll get into that third category a lot more later on, but I wanted to pass the microphone over to Marnie for a second to tell us similarly about sort of the origin story of her organization, Natural Carbon, and how it came to be.
Yeah, thanks so much, Andrew. So Natural Carbon was founded about 10 years ago by a well-known Australian environmentalist. And what he was really looking to do was to ensure that Indigenous communities in Australia were able to access the carbon market in a fair way and make sure that they were very much at the centre of those projects and had complete autonomy over them. So Natural Carbon's been involved since then, particularly in savanna fire management carbon projects, which is a quite unique carbon methodology in Australia that involves early season burning and cool burning to alleviate the late season really hot burning that can emit a lot of carbon, and it also has a lot of cultural and social and ecological benefits as well. So we've been doing that for quite a long time, and then about 2 years ago, Natural Carbon took a bit of a different direction, and that's when Save the Children came on as our major shareholder and a couple of new directors, and the decision was to basically take what Natural Carbon was doing project by project and try to really scale that up and create impact at a much broader level. So while we still have a small number of carbon projects we're supporting, our focus right now is on two things. One is on developing a fairness standard that could be applied to any carbon or indeed other environmental market instrument that ensures that Indigenous people and local communities are at the centre and have full autonomy over the projects that they're doing. And the other thing we're doing is supporting Save the Children to explore opportunities to access carbon markets and other environmental markets right across the world in the communities that it works with.
That's great. So can you tell me a little bit more about this collaboration then that's taking place between your organization, Marnie, and Save the Children and Global Ventures?
Yeah, sure. And I mean, it's a beautifully complementary collaboration because we have the carbon expertise, and obviously Save the Children just has the communities it's working with all over the world. And we know that about a quarter of land on Earth is managed by Indigenous people and local communities, and that quarter of the land actually has 80% of the world's biodiversity. So it's critically important that that land is used to help address, to be part of climate solutions, and also critically important that those communities are genuinely involved and genuinely see benefit sharing from participating in this race towards addressing climate change. So what we do is basically provide that in-house expertise for Save the Children that it doesn't have on carbon projects. And at the moment, we're looking at a number of countries, particularly in Southeast Asia and the Pacific, to see where there are opportunities to work with those communities to develop carbon projects and then scale them up. And then at the same time, applying the standard that we've developed to make sure that that is done in a completely fair way to those communities.
Great. And Paul, maybe you can say a little bit more from your angle, the motivation behind being sort of the financial backer and a major owner in this partnership.
Yeah, thanks, Andrew. And I guess perhaps for some of your listeners that know Save the Children well, their first question might be, well, you know, why is Save the Children getting so involved in the climate change issue? And I think, I mean, most people ask that, but then they quickly reflect and quite realize quite quickly that there's not much point Save the Children achieving education and health and other outcomes for children if the very planet that they're living on is no longer supporting their well-being. And so for Save the Children, addressing climate change now sits alongside our other health and education outcomes. But of course, we bring a particular set of skills and capabilities and relationships to addressing this issue. We have relationships, as Marnie's indicated, with about 2,500 communities around the world at any one time. And we've got a deep level of trust. We're very good at community mobilization, community education, these sorts of skills and capabilities. But we don't have deep technical knowledge around different carbon methodologies. We don't understand at a deep level how to the intricacies of measuring carbon sequestration, for example, and we don't necessarily have the same access to carbon markets as some of the specialist players do. So for Save the Children, we really see this space as an opportunity to partner not just with Natural Carbon, but with other environmental organisations as well. So Save the Children has recently entered into a global partnership with WWF, as part of our push into this space. And so the mix of Save the Children, of environmental organisations, of technical partners like Natural Carbon, together with some of our traditional supporters who are also interested in not just giving philanthropy or grants to addressing some of these climate change issues, but bringing investment to the table, that's a really powerful combination of partners. And that's really that coordination and collaboration is really what Save the Children Global Ventures is helping to bring together on behalf of all those players.
Very clear. Thanks for that, Paul. Marnie, since we've gotten a little bit into the programmatic areas already in terms of what you do, I wonder if you could tell us about, in some detail, your pilot in the fairness standard that's been recently launched and being worked on. How exactly will first of all, what is it for our listenership, and then how exactly will it work?
Yeah, thanks. So the easiest way to think of it is as fair trade for carbon. And actually one of our directors has a long history in fair trade. So what it does is it makes sure that when that carbon is created, that the communities on whose land it's being created are actually a whole part of that. And unfortunately, there's a lot of examples, both in Australia and overseas, of carbon service providers coming in and basically saying, don't you worry, we'll take care of all this. You don't have to worry about the detail. And then there's a whole lot of opaqueness around the project and how it's developed, and then how much money is being earned, how many carbon credits are being earned. The idea is to bust all that open and make sure that the community is fully at the centre of it and has complete rights of autonomy and consent over every aspect of the project. And then the great thing about the standard is it's a double-sided standard, so it works for the communities that are doing it, and will hopefully get them a premium on the credits they're selling. Also, we're hearing really strong voices on the buyer side of the market that they really are looking for this type of standard that certifies the provenance and the integrity of the carbon credits, not from the carbon side. It sits alongside carbon methodologies or other environmental market methodologies, but from that side of the social benefits and the benefit sharing that happens in those projects. So, and what it does, and there's a number of standards that touch on co-benefits, but this is really going beyond that and actually getting into the contractual arrangements between those communities and the carbon service providers and the people who are purchasing the credits, and making sure that it's fair right through. So it's beyond co-benefits to make sure actually there's complete ownership, community ownership of those projects.
That's great. Well, that's very encouraging to hear that there's so much demand on the buy side. I wonder if you could talk to us a little bit more about the sort of certification process itself. And given that the sort of motivation here is to scale a lot of what your neutral carbon is doing, what is the process for scaling that more broadly, regionally, globally, even?
Yeah, and that's what we're working on right now. So we're just completing right now our first pilot with one of the communities we work with up in Northern Australia on a Savannah fire management project. And then we're rolling, and that will include third-party assurance from KPMG. And then that will roll right into a new phase of development of iterating and improving the standard, and rolling it out more broadly across different types of projects and also internationally as well. But it will operate, and quite soon we expect to move it out of Natural Carbon, which is a private company, because that's what the passion and the mission is of our directors, but move it into a not-for-profit where most standards sensibly sit to avoid all issues of conflict of interest. So that's the next phase, and we're very excited about it.
Got it. Makes sense. Paul, I wanted to backtrack just a little bit here and come back to the two other categories of the three categories that you mentioned. In particular, the blended finance angle and the impact investing. I think both of these have enjoyed a lot of buzzwordiness over the last few years. And I'd love to get into a little bit more about what Save the Children Global Ventures is doing in these particular areas. And also ask just sort of, given the way that you've categorized things, are you also applying blended finance and impact investing to climate finance, or are you sort of separating that out? And what would have been the choice to have separated that out as you have?
Yeah, no, all three product areas, if you like, Andrew, are interrelated. So with our impact investing, we can look around for great climate change orientated investments. So perhaps investments in new ways of generating sustainable energy, particularly those that are perhaps going to be of most benefit to disadvantaged communities. So we can use the impact investing approach. We certainly are looking at a range of blended finance opportunities for our climate finance work. And often that has to be the way that they start. So Marnie's talked a little bit about the FAIR standard, and you can start to see, no doubt, why Save the Children was so attracted to the FAIR standard, given our values as an organisation. But the investment, if you like, in a community required to make sure they are truly empowered, that they are truly the ones that are directing the program and have informed decision rights, takes quite some time. And that often is not very commercial. So we're finding that many of our climate financing projects at the very beginning, at the very sort of feasibility community engagement stage, need a degree of grant and philanthropy to make sure that we've got enough time to really invest in the community's own understanding and awareness, and perhaps making sure they've got the right governance mechanisms appropriate so that they are, in fact, in control of the project. From there, as we go to establishing the carbon project, you can then bring in project financing, which tends to be more from a private sector perspective. And then ultimately, that project financing gets repaid through the carbon and biodiversity credits that you might be selling. And then on top, hopefully, the goal is to have a surplus that can be then reinvested into education or health or other co-benefits that benefit the community. So you can start to see how we use a mix of philanthropy and grants together with private sector funding. Save the Children is also accredited to the Green Climate Fund, which is one of the largest sources of climate financing in the world. We've got, I think now 14 projects globally that are in different stages of approval through the GCF process. Again, some of our climate financing work from a global ventures perspective can dock into some of our Green Climate Fund projects as well. So absolutely, blended finance and impact investing is related to our climate financing work and vice versa.
Makes a lot of sense. Since it started coming up in your answer and you were talking a little bit about outcomes, I wonder if you could explain to us a little bit about the kinds of returns on investment that your group is looking for when you consider investing in a project or catalyzing private sector investment in a project. And certainly financial component of it being one, but also maybe also the social kinds of impacts that you're frequently looking for.
Yeah, absolutely. So, I mean, first of all, to be really clear, I mean, Save the Children is an impact first investor. So whenever we're looking at a particular investment opportunity, is the initiative solving a problem that Save the Children cares deeply about? Is it a problem where they have a really clear theory of change? Are the organisers or founders of the initiative really as committed to the impact as they are perhaps to the financial return? These are some of the sort of initial questions that we ask as part of our due diligence process, Andrew. But from there, we start to make sure that the initiative, of course, meets the financial criteria that we need. And these vary depending on the particular product that we're using. So for our commercial impact investment funds, we're looking for, roughly speaking, a sort of 7 to 10% return per annum over the life of the fund. And these are 10-year closed-ended funds, which means that we invest at the sort of first 3 or 4 years of the fund. We are generally holding for that sort of middle 5 or 6 period, 4, 5, 6 years, and then selling at the end of the period. And most of our return is actually generally in capital return, although we do have debt products which are clearly providing a sort of ongoing interest payment as well. So that's a sort of rough range for our commercial products. For blended finance, it tends to be quite different and quite dependent on the transaction. So we'll mix philanthropy and grants where there is no financial return. There might be a degree of concessional private sector financing. So this might be perhaps a loan at sort of 3 or 4 or 5% per annum. And then there might be a more commercial layer of financing as well, if the project can sustain that. So again, just depends on how the transaction is structured.
But I take it then the expectation is to be fully financially sustained by the investments. Is that right?
Well, not necessarily. I mean, at the end of the day, we're impact first. Some products absolutely need to return their capital and provide a really strong return. That's the promise that we've made to the investor. But Save the Children is not doing this at the end of the day to make a profit. It's doing this as a way of achieving our mission by other means, if you like. And so one of the great, I think, advantages that Save the Children has is that we can bring philanthropy and grant money alongside private sector funding, blend the two, and get a return that is, in some situations, well below market and might not be otherwise commercial. But going back to how we started today, we've got to unlock these great new funding pools. I mean, globally, there is about $410 trillion, I think, of private sector funding. If we can just get 1 or 2% of that global private sector assets more directed towards the SDGs and particularly, children's well-being, then that really helps us close the gap. And so that's ultimately what gets us out of bed every day.
I'm not sure you're dreaming big enough. 1 to 2% seems too small, Paul. We can always aspire to be larger than that. But yeah,
That's right.
Obviously 1 to 2% of that many trillions can really be substantial. Marnie, I'd like to turn to you now and ask you a similar question about sort of the return on investment type thinking that your organization does when you get involved in these projects. So what kinds of outcomes are you looking for, and how do you really measure those against the investment, the time, the resources that need to go into them?
Yeah, our company is very mission-driven, purpose-driven, and frankly is going through a period of flux right now as we focus on the standard, focus on supporting Save the Children. So we're actually working through that, and we're going to see, as I said, we're looking to move the standard into not-for-profit, and then we're going to reevaluate and look at the best next way to create an impact. So it's a work in progress.
Makes a lot of sense. So Paul, a lot of the listeners on this webinar tend to be sort of entrepreneurs or potentially aspiring, people that might be candidates for the kinds of investments that your organization does. Can you talk a little bit about, the criteria that Save the Children Global Ventures considers when it starts looking at potential opportunities to invest in?
Yeah, so perhaps focusing in on our impact investing activities, Andrew, and again, it won't be a surprise, I've talked about the sort of impact first piece. So does the initiative address an issue that Save the Children cares deeply about? Is it a big issue? So I was excited. I was in Sydney yesterday meeting a potential investment opportunity that was addressing children's when children are born, about 6 to 8% of children globally need some sort of initial support to breathe. Now that's about 10 million babies a year. So it's that sort of really significant size problem that gets our attention. And are the founders committed to addressing that sort of impact as well? So start with the impact first, clear measure, good theory of change, those sorts of issues. Then go to the financial side. Does the initiative have a clear customer base? Who's going to pay for the product? Who are the existing providers of that product? How is the initiative that we're looking at superior, either in price or performance to existing products? So essentially the financial model that's associated with the initiative. We obviously look at the team. I've been a founder of various startups myself, and I know that you can have the very best plans, but very quickly something unexpected happens. And so we really look for founding teams who are committed impact-wise, obviously have a strong sort of financial capability, but also have that other sort of agile entrepreneurial approach, can be a bit scrappy, to use that term, and are likely to be able to survive when things don't quite go as planned. So a great team. We're looking for an opportunity to really scale an initiative. So Save the Children, one of the world's largest NGOs, we're operating in 120 countries. We want to find those initiatives that we could not just have in 1 or 2 of our countries, but perhaps in 5 or 10 or even 50 of our countries, and really roll it out so that its impact is global. And then the final question is, can Save the Children really add value, not just the financial capital that we might be investing, but can we provide introductions? Can we use it ourselves? And so many of the investments that we've made, like Natural Carbon, are providing services back to Save the Children because they meet a sort of key capability gap that Save the Children has, and that we want to be able to access to be able to achieve our mission. So those are some of the sorts of questions that we would ask any new entrepreneur coming to see us.
And how might an entrepreneur compellingly convince you that they can have the kinds of impact, the level of impact that you would be interested in, especially if they're looking for sort of that early, maybe seed or pre-seed investment? What can they do during that due diligence process to actually convince an impact investor that they will have the impact that they say that they will have?
Yeah. So the best social entrepreneurs have a deep understanding of the problem that they're trying to solve. And so when they come to see us, they have got an approach that aligns really well with what the evidence says is most likely to work. I mean, take children's education, for example. One of the most effective ways to have impact on a child's education outcomes is to help improve the teacher and the teacher's environment. And so, if an entrepreneur understands what the evidence says about improving teaching at a school, and how that's linked to improved education outcomes for children, we're starting to, be impressed by the fact that they're understanding that sort of theory of change. So that's more important than having particular indicators. What we've found that we'll invest, often we're investing at a relatively early stage in a business, and what might be an appropriate impact indicator at that early stage might be still relatively basic, because again, the level of sophistication for that entity needs to be commensurate with its business stage. But what we have seen as we've worked with companies over time and they've grown in their maturity is that then the impact measurements also become more sophisticated, and often alongside that, we've helped bring some of our own evaluation, evidence gathering capabilities globally to assist the startup become more sophisticated.
Yeah, makes a lot of sense. If I could try to tease out an element here, or a question that's been in my mind as you've been talking about this, is that it sounds like a lot of the investments that you make and the activities that you do are sort of at the intersection of the startups, children, and climate angles, sort of like a Venn diagram of these 3 things. most of which, are not, and I don't think intuitively all three of them coming together is not always intuitive, at least not to someone like me. I could see how the pairings of two of them at a time would be very clear. Can you talk about some of the examples of the kinds of projects that you've seen that have meaningfully inhabited the overlap of all three of these things at the same time?
Well, I was looking at a great potential investment opportunity earlier in the week, Andrew, that I think is perhaps a really good example, where it was a project in Ethiopia that was bringing together reforestation, cook stoves, and carbon credits to obviously have environmental outcomes. The reforestation, the cook stoves, of course, provide a much more efficient way to generate heat for cooking and use, often avoid the deforestation in the first place. But children, and particularly girl children, are very likely to be the ones that have to go out and collect firewood. And that can often mean that they're getting to school late, or they're not getting to school at all because of their family responsibilities. So when you start to see a project like the one that I saw that actually is focused around girls' education, reforestation, more efficient cooking methods that also, of course, have a whole range of health benefits, and are doing this in a way that generates carbon credits for the community and is sort of got localization built in, you start to get pretty excited about this type of project if it can be scaled. And it certainly looks like those sorts of projects have got huge potential to be scaled in many, many countries.
Yeah, I'd love to come back to this idea about the pipeline of those kinds of businesses are out there. But Marnie, I just wanted to backtrack a little bit and talk more about the sort of fairness standard pilot, and in particular the sort of marketplace aspect that needs to be in place for that to succeed. From your point of view, how well developed is a sort of international market for these carbon credits? Where is the momentum heading in that respect? And to what extent are sort of digital or technological solutions being leveraged to better form that market and make it easier for transactions to take place in that market?
Yeah, I mean, there's a lot happening on all those fronts, and part of our work is to try to keep across it and make sure that what we're developing is relevant at the same time that the market is moving forward, frankly, very quickly. I think, as I already mentioned, Indigenous lands just need to be a critical part of the climate solution. So they're already involved. What we're trying to do is make sure that they're involved in a fairer way. So that's going to keep happening, and we're trying to influence through our standard, and also the market is moving. And I think in particular, for better or worse, buyers, at least what we're seeing in Australia, are getting quite a little jumpy about not wanting to be part of an expose saying that they've bought credits that are lacking integrity. So I think that's actually a really powerful driver. We're coming from the driver of fairness to start with, but we think it takes all drivers to move forward. And I think that's one that's actually driving the market as well, and making sure. And what it also can do, though, is have a perverse impact of driving buyers away from some of these more innovative and community first projects. So part of the power of the standard, I think, is also to make sure that those projects can be in the mix, and that buyers aren't shying away from them for fear of potential adverse reputational impacts if they don't know enough about them. So having that third-party verification, I think, is very valuable for them. The tech is going to be critically important. Again, we need to make sure this will be one more layer of standard, and we need to make sure that it can be delivered in a really cost-effective way. Certainly no more than any premium that we expect will flow from having this certification associated with a carbon credit. So that's something also we're really keen to tap into and take advantage of.
And to what extent is the tech being piloted in this pilot project right now?
At a future stage, we would like to pilot tokenization, for example. I mean, there's a very real question with this standard, with all sorts of standards and overlays being put on both just real world products and environmental products, of how do you keep that provenance tracking as potentially, especially if there's a secondary market as things get resold. So I think tech has to come in and help solve that idea of, you know, in the supermarket or on an online market, you get the QR code and that shows you the tracking of the provenance right through. We're not at that stage yet, but we know it's going to have to be part of the solution, especially as everything scales up.
Yeah, well, an exciting time to be there.
Yeah.
So Paul, just coming back to something that came up when you were, you know, describing that particularly interesting example of reforestation and girls' education and all of that. I think oftentimes in these emerging markets, at least when you're talking to the investor side of the equation, you often hear that there's this challenge of the pipeline not being seeded with sort of investment-ready projects that are out there for impact-oriented investors to invest in. I was just curious to what extent, if any, Save the Children Global Ventures is thinking about how to seed that pipeline or provide the technical assistance to get more startups into sort of that top of the funnel where it's so critical for them to be, so that you can start developing these startups into full-blown companies as they go through the various different stages and ultimately start sustaining growth and impact on their own.
Yeah, so Andrew, we are not really seeing a problem around a lack of pipeline. We're probably now seeing something like 40 investment opportunities every month, which, you know, given we've still got a relatively small team, is pretty overwhelming. These are, generally speaking, investments that are aligned with our mission: children's health education, child protection, and climate change issues. So it's not on the pipeline side. I mean, you know, there are lots of social and environmental incubators and accelerators. Most universities around the world have some sort of process like that. Many governments are supporting incubators and accelerators. So for Save the Children, and we often come in after that sort of early stage process, late seed type stages where we find the greatest demand for us. You know, there's lots of investment opportunities. I think the problem is bigger on the investor side. So I think, you know, from our perspective, many investors have quite rigid silos for their funding pools, which often don't align very well, in our experience, with the real world. So, you know, an example around, you know, only investing in debt or equity, only investing in ODA eligible countries or non-ODA eligible countries. I mean, many of the entrepreneurs that come to us, their impact might be in Kenya or Indonesia or the Philippines, but actually they want to be domiciled from a company perspective in Delaware or Singapore or Sydney, because, you know, they are ambitious entrepreneurs and they want to be able to tap global capital markets in the future. But of course, soon as they're domiciled in the US or Australia or Singapore or somewhere like that, they're generally ineligible for any of the development finance institution funding. And so this sort of narrow categorization, without thinking perhaps more generally about how you want to encourage an ecosystem that's addressing the problem that you're trying to address, I think is a real limitation on the investment side.
And given your experience in the field, have you seen any, I mean, are there any positive signs of momentum towards a more realistic set of standards on the part of investors, or do you feel like it's as rigid as it's always been, or maybe even regressed?
It's pretty rigid, but I mean, the most progressive investors, and I think some of these are often investors associated with family offices. I mean, that's where we're finding investors that are really prepared to think about where they play in the sort of in a capital stack, in a range of different capital layers. So whether they want to be first loss, whether they can be concessional, whether they want to be fully commercial, they're able to make decisions quickly. They're often very sensitive to the impact, and they're very interested in understanding how well we're able to measure that impact. So many of those sort of private investors, family office, high net worth type investors, more so than the institutional investors. The institutional investors we still find to be quite siloed, quite static and fixed in terms of their criteria.
I suppose that's pretty well aligned with what one would have expected, just based on big institutional investors being somewhat bureaucratic in terms of reputation, but makes a lot of sense. That's great. So I think we're going to wrap up here soon, but I just wanted to conclude with a question that sort of is aspirational and talking about where things are heading. I guess the question, and Marnie, we can start with you, is what are you most excited about in this space over the next, say, 1 to 3 years?
Yeah, and to answer, I'd love to quote from a very powerful statement that was made recently by the Australian Indigenous Carbon Industry Network, which is the peak body for all the Indigenous communities participating in the carbon market here. And what they said was, for too long, third parties have exploited the rights of Indigenous people to carbon. It's time to flip this narrative and reframe who benefits from this industry. So what I'd love to see in the next 1 to 3 years is, through our standard and other influence and other for-purpose actors, seeing that narrative being flipped.
Thanks, Marnie. Same question to you, Paul.
Well, I've talked about some of the frustrations on the investor side, but actually I'm really quite excited about some of the changes that I'm seeing, particularly in Europe amongst the more progressive investors, in the way that they are unlocking private capital to help us solve some of these really huge problems. So I'm hoping that impact investing and blended finance are going to continue to grow and become over time mainstream, and that will give us the size and scale to really have a meaningful impact on some of these big sustainable development goal problems that we're looking to address.
Let's hope so. Marnie and Paul, thank you very much for your time and for your thoughtful answers to the questions.
Great to be on the show.
Thank you.